Hello everyone, this is Dr. Mihir Shah once again with another video. This is the last part of our last minute revision for the subject of strategic financial management, topics to be covered to easily pass. We have already covered up 4 parts, okay, in which basically all the types of sums were covered up. Now the last part, my last topics which are left, we are going to cover up in this particular video. So let us see which are the topics which were lastly pending.
Now, the very first thing that you'll need to learn and note down is something called as the provision for NPA, that is non-performing assets. So these are the percentage of provision. Like in this chapter, basically what they ask you to find is the provision. Okay, what is the reserve? What is the provision that the bank needs to create? Okay, because then the bank lends money and then it has a lot of time. At times there are some loan become they get converted into bad loans. Okay, then there are reserves provision we have to create, like delay of 1 year, 2 year, 3 year and above if the loan have not been repaid on time. So the bank has to create provisions. Okay, and there are rules for provisions. So number one, for loss making assets which are still yet outstanding, the provision that the bank has to make is 100%. For doubtful debts, again it is 100%. For doubtful debts up to 1 year, okay, now this is very important. Okay, up to 1 year it is 25%. More than 1 year, but up to 3 years it is 40%, and 3 years and above everything is converted to 100%. Okay, next, substandard for secured loan is for 15% provision. Substandard for unsecured exposure is 25%, and for standard assets, okay, 0.4%. So this is the first rule, or you can say the table that you need to learn. Loss making asset 100%, doubtful debts 100%, up to 1 year 25, up to 1 year, above 1 year, but up to 3 years 40%, and more than 3 years again 100%. For substandard, if it is secured, 15%, unsecured 25%, and for standard assets, those are the normal, which are in rotation, that is 0.4% or 0.40%. Okay, that is one thing what you'll need to note down. Secondly, we'll have to make some a format. Okay, so note down everyone this format. We have particulars amount. The very first thing will be balance outstanding. The bank needs to know how much balance is yet outstanding. Less realizable value of security, whatever security have been kept by the bank. Okay, so you need to less the realized value, will get you the balance. From that, you need to minus DIGC or ECGC. That's nothing but the insurance cover. That is the percentage on balance. Okay, on this balance we'll have to remove this percentage. Okay, when you minus again, you will get something called as unsecured portion. So this is less, this is also less. Whatever answer you get is called unsecured portion. On the unsecured portion and the balance that you will have got, now we'll have to create some provisions. So number one provision will be on unsecured portion, which will always be 100% of unsecured portion. So whatever is 100, whatever is this value will get noted on here. And provision for secured portion will be percentage of realized value, meaning this is the realized value. On this value we'll have to remove the percentage based on the number of years. Again, if it is 1 year, okay, see in the previous chart, if it is up to 1 year, 25%, from 1 to 3 years 40%, and 3 years and above 100%. So this particular value can be used in this particular format. Okay, so I want everyone to see that. You'll note down this the format. So this rule, and once this rule and the format has been thoroughly done, we can start with the very first type of sum that will be based on this particular format. So let us see that. The question is given as: Sure Bank had extended the following credit lines to a small scale industry which had not paid any interest since 1st March 2012. Okay, balance outstanding is given as for 2016. So 12 to 16, so that 13, 14, 15, 16, that's more than 3 years. Okay, they are giving you term loan and export credit. DIGC covers security held, realizable value. Required, compute the necessary provision to be made for the year ending 31st March 2016. Okay, so now the format is very sorted. Okay, we have particular, term loan and export credit. Okay, so whatever has been given to us, we just have to do it. After that, we have that exact same format noted down. So you all can first just read the format once. Okay, so now let us see how we start with the sum. Okay, very first thing, the balance outstanding. Now if you can look here, is given a balance outstanding on 31st March 2016, 70 lakhs and 60 lakhs. So I'm noting down 70 and 60. Step number 2, we need to less the realizable value of security. If you can see here, realizable value of security is 20 lakh and 15 lakhs. So we noted down that. 70 minus 20 is 50, 60 minus 15 is 45. So we subtract and we get the value of our balance. Next is DIGC or ECGC cover, that's an insurance cover. So it's given for term loan, it is 50%, and for export credit, it is 40%. Remember, this percent will always be on the balance that we have got. So 50% will become 25, and 45 ka 40% will become 18. So we have noted down that. Again, we less it. 50 minus 25 is 25. 45 minus 18 is 27. Okay, so we have got that particular provisions, the unsecured portion of our outstanding value. So now we can start with the provision. Provision may number 1, we need to first find the provision for unsecured portion. Unsecured, this is my unsecured values, okay, 25 and 27, and as per the rule, 100% of unsecured will be taken. So the full value is taken as 25 and 27. Second, provision for secured portion, that is the percentage of realized value. So realized value was 20 and 15. Okay, now of this two value, it is given percentage is based on the number of years. Now we looked here, it was 2012 loan, and till 2016 it is still not been paid. There's more than 3 years, 4 years, there's more than 3 years still been outstanding. So as per the rule, if your loan is above 3 years, or the doubtful debts are above 3 years, 100% of the value will be taken. So we'll take the entire 100%, which is 20 and 15. So the whole amount comes here. So finally we total up 25 plus 20 is 45, and 27 plus 15 is 42. That's our total provision. Okay. So this is the very first type of sum where we have to solve as per the format. We have balance, less realized gives you balance, less DIGC gives you unsecured portion. Unsecured ka 100% is taken as provision, and realized ka we take it according to the per number of years. Okay, this is the very first type of sum. So I hope everyone have understood this. Okay, now we will jump to the second type of sum. Okay, that is again very simple, but you need to remember the table for that. Okay, now, chalo. From the following information, find out the amount of provision to be shown in P&L account of a commercial bank. Assets and the amounts have been given. So for such kind of sums, if you look here carefully, they have standard, substandard, doubtful, loss. The rule is first you note down all the assets. Okay, now this is our solution. So I have noted down all the assets as it is. We have standard, substandard, doubtful for 1 year, doubtful for 3 years, doubtful for more than 3 years, loss asset, and we have noted down the amount, that is 4,000, 2,000, 900, 400, 300, and 500. Okay, now in order to get the solve ahead, okay, first thing I would like is everyone should read this table. Okay, just read this table once, and then we'll see how to solve it further. Okay, so now let us see how we solve this part. Okay, this sum. First is standard. Standard के लिए the rule is, if there is standard asset, the provision percentage will be 0.4 or 0.40%. So we'll note it down as 0.40. Okay, so 4,000. Now very simple. 4,000. You just have to multiply. You have to multiply the amount into the percentage. So 4,000 into 0.40% gives you the value of 16. These are all in lakhs, so it's 16 lakhs. For substandard. Okay, now they haven't mentioned whether it is secured or unsecured. We have to assume it will always be secured. Okay, if not given. So again, 2,000 into 15% gives you 300. For doubtful up to 1 year, up to 1 year it was 25%. So we have noted down 25. 900 into 25% is 225. Up to 3 years, it is 40%. So we noted down at 40. So 400 into 40% is 160. Doubtful for more than 3 years, it is 100%. So 300 into 100% is 300. And loss making is again 100%. 500 into 100 is 500. So it is as simple. You just have to remember the table. Okay, based on whatever they have given you, you have to just take those provisions, multiply with the amount, and we get the total provision. We add up the total values of all the provision that we have got, and that was nothing but a total provision required. the total comes to 1501 in lakhs. Okay, so this is how you'll have to solve the sum when they are given you all the values of assets. The previous one was based on okay DIGC and based, so that was the format based, and this is based on your table. So this entire topic consists of these two types of sum which are very exam oriented. So I hope everyone have understood that. Okay, here is a statement showing the working capital needed. We have particulars, we have formula ka one column, and then we have amount ka one column. Working capital basically is nothing but the difference between your current asset and your current liability. Okay, under current asset, remember there has to be minimum these five things: stock of raw material, work in process under which you have again raw material, labor and overheads, finished goods, debtors and cash. These are the five things that has to be there in your current asset. Once we get the value, we get the total current asset. After that, we note down the current liability. Now, there are only two things which you have to remember in current liabilities. We have creditors and we have outstanding. Again, outstanding has labor and overheads. When you subtract total CA with total CL, you get your gross working capital. In the question, if there is any margin of safety given to us, then we add it to working capital and that becomes our net working capital. If there is no net margin given or margin of safety given, then your gross working capital eventually becomes your net working capital. Okay. The formula is very simple. It's unit multiplied by the rate multiplied by the period. Unit and rate will appear from the working note that we will create. Period is the only thing which we'll have to check in the question. Okay. Now, I want everyone to see that you'll note down this particular format. And one more very important thing after noting the format, some rules. The rules stated that is work in process, labor and overhead. Whatever answer you will get, we'll have to take half of that because the work is still not done. So labor and overhead under work in process will always be half. For finished goods, the rate will be always taken as cost of production ka rate. For debtors, it will always be taken as selling price ka rate, and for creditors, it will always be taken as raw material ka rate. Okay, so these are the 3 to 4 simple rules that you'll have to remember. Number one, under WIP, labor and overheads will always be half. Debtors are on selling price, finished goods is all on cost of production, and creditor is on raw material. Okay, well, once I'll make that format, see that I'll even note down these particular rules which I've written in red. Next, after noting the format, okay, the next thing up here is your working notes. Two working notes we have to create. One will where we'll able to find the units, the other one will be for the rate. Okay, so for working note, number one will be where you have to create a cost structure which consists of raw material plus labor plus overhead, that gives you cost of production, plus profit gives you sales. This entire format is basically used, or working note is used to get the rate amount of your sum. Okay, so all the rate will come from this particular table. Second, we need to get the number of units. So the unit ka formula is number of unit is equal to annual production, full year ka production, divided by 12 if it is monthly base, divided by 52 if it is weekly base, and divided by 360 if it is daily basis, depending on the question. Okay, so these are the two working notes which are very important that we need to solve before solving the sum, because from cost structure we'll be able to find the rate. From the number of units formula we'll be able to get the number of units. After getting this, okay, we will be solving the sum based on working capital, and after solving the sum based on working capital, there will arise one question where they will ask you to find the maximum permissible bank funding, okay, or bank financing. So for that, there are three formulas that we'll have to follow. It's called methods of lending under Tendon Committee, where we'll be finding the maximum permissible bank finance. Three methods are there. Number one, we have to get the value of 75% of CA minus CL, that is current asset minus current liability. Second method is 75% of CA minus current liability. And the third one is 75% of current asset minus core current asset, whatever you get the value minus current liability. Okay, so these are the three formulas that we need to note down under Tandon committee, whereby we will be asked to find the maximum permissible bank finance. Okay, so now with all these three slides that we went through, first the format and the working note and then the formulas. Now let us see how to actually solve the sum, combining all the three parts of this particular sum. Okay, here is a question in front of y'all. From the following figures, prepare an estimate of working capital. Production mein they are giving you 30,000 units. Selling price per unit is rupees 10. Raw material is 60% of selling price. Direct wages is 1/6 of raw material. Overheads is twice of direct wages. Then they are giving you some data related on months. So material in hand, production time, finished goods in store. They have given you credit for material, credit allowed to customers, cash balance, and thereafter they said wages and overheads are paid in the beginning of next month. So there's something related to outstanding. Also calculate the maximum permissible bank finance as per Tandon committee, assuming that the core current asset is 25% of total assets. So core current asset is 25%. We'll have to keep that in mind while solving ahead. Okay. Now, in order to solve the sum, the very first thing what we have to do is first always solve the working note. Number one working note will be based on our cost structure where we'll be getting all the rates. So let us start with that first working note. Okay, I have the format is your structure. Raw material, labor, overhead, COP, profit, sale. Let us see what things have they given us in the question. See, I can see here selling price per unit is rupees 10. So we note down that selling price is 10. So we have noted that. Raw material is 60% of selling price. So 10 ka 60% is rupees 6. So raw material is 6. Direct wages, that is nothing but labor, is 1/6 of raw material. So raw material divided by 6 will give you 1. So labor is 1. Overheads is twice of direct wages, so it's double of direct wages. So double of 1 is 2. 6 plus 1, 7. 7 plus 2, 9. So my cost of production is 9. Selling price is 10. So I have got a profit of rupees 1. So our entire cost structure is ready. So all the rates will be taken from this particular table. Second, we need to get the number of units. Now, number of units के लिए formula was annual production, which is 30,000 units, and in this sum entirely they are talking about months. So it will be 30,000 divided by 12 because in a year there are 12 months. So once you divide, we get the number of units as 2,500. Now remember, in your entire sum, the number of units will remain 2,500. The rate will be taken from the cost structure, and for the period, we'll have to check the question. Okay, so the format is there. Okay, remember unit for the full sum is 2,500. Rate comes from the cost structure, and period will be there from the question. So let us start one by one. First thing, current asset, we have stock of raw material. Now remember, for stock of raw material, the number of units that are required are 2,500. The rate of raw material is rupees 6. And the period, let us check for the period. Here I can see your material in hand, that is raw material in hand, is for 2 months. So we will apply to the formula unit into rate into period. So we get it as 2,500 was the number of units, the rate was 6, and the period is 2 months. Just that is it. Unit take it from unit, rate take it from the cost structure, and period from the question, and just multiply it. That's it. With that we'll be able to get each and every answer. So 2,500 into 6 into 2 will give you the value of 30,000 rupees. That is the value of raw material. Now next, under WIP, we have three things: raw material, labor, and overheads. For all the three, again, number of units remain 2,500. For the rate, raw material is 6, labor is 1, and overheads is 2. Now for WIP, or work in process, there will be various names given in the question. Okay, they can give you in the form of what is processing period, trade cycle period, business period, all those kind of stuffs here. Okay, so let us see what is given here. Yeah, here they have given us production time. In the question, they are giving you production time is 1 month. Production time is nothing but work in process. So for all the three, the period will be 1 month. Now, the most important thing, remember, For labor and overheads under WIP, whatever answer we will get, we'll always have to take the half. Okay. So raw material 2500 into 6 into 1. Labor will be 2500 into 1. Okay, the value is 15,000. For labor 2500 into 1 into the period 1, and whatever answer you'll get, we'll have to take half of that. So I'll take it as 0.5. The value will come up to 1250. For overheads, again, number of units is 2500, period the rate is 2, period is 1, and we always have to take the half of that, so the value comes to 5000. Next, for finished goods, always remember finished goods, the rate is always taken on cost of production. So number of units remains 2500, COP is 9, and the time period for finished goods in store is 3 months. So we just multiply 2500 into 9 into 3, we get the value as 67,500. For debtors, we always take it on selling price unless mentioned in the question to take it on some other rate. Again, 2500, selling price is 10. Debtors, another name for debtors are customers. So customers ka period is 3 months. So it will be 2500 into 10 into 3, which comes to 75,000. Cash is always given in the question. So that is 40,000. So we note down that as 40,000. So with that, all our assets or our current assets are done. So we add up the total current asset and we get the total as 2,31,250. With this, our first part of the sum is done. Now we jump to the second part, that is current liability, under which we have to first find the value of creditors. Now, under again creditor, number of units is 2500. The rule was creditors are always taken on raw material, which is rupees 6. So it will be 2500 into 6 into credit for material. Okay, these are suppliers. Credit for material is 2 months. So we will take this as 2500 into 6 into 2, which comes to 30,000. Outstanding if given. Now in the adjustment, they are giving you wages and overheads are paid in the beginning of next month. But the current month ka wages and overheads are paid in the next month. So there is a time lag of 1 month. So outstanding of 1 month is available. So the period is 1 month. Again, 2500 into labor, which is 1 rupee, into the outstanding period, which is again 1 month, which comes to 2500. No half. Here you don't have to take any half. Half is only in WIP. Overheads 2500 into 2 into 1, which comes to 5000. We add up, we get a total current liability as 37,500. In the sum, there is no margin of safety given. So CA minus CL will be our final answer. That will be our working capital. So current asset minus current liability, the value that we should have got would have been 1,93,750. With this, we were able to solve the problem sum based on working capital financing. Now, the next thing what they have asked us to find is calculate the maximum permissible bank finance, where they are giving you core current asset is 25% of total assets. So that will be, we'll keep that in mind because that will be useful. Remember one thing, just note down the value of current asset and current liability somewhere, because I'll be, we'll need those two values in order to get the tendon committee ka values. Okay, so 2,31,250 CA, 37,500 is the value of current liability. Now let us see how to find the maximum permissible limit. In order to find, we'll have to use the tendon committee ka formulas. 3 methods are there. Number 1, the formula is the maximum permissible limit is 75% of current asset minus current liability. So it is nothing but 75% of 2,31,250, that was the current assets, minus current liability, that was 37,500. We will subtract it. Whatever amount you get of that, we have to take 75%, and that amount will come to rupees 1,45,330. So this is the maximum limit which the bank can give you as a loan under the first method. Under the second method, the formula is 75% of current asset minus current liability. Current asset was 2,31,250. So 75% of that, whatever amount you get, minus 37,500. So the value that you all should have got would have been, 75% of 2,31,250 is 1,73,438 minus 37,500 will give you 1,35,938 rupees. This is as per the second method. As per the third method, the formula is 75% of current asset minus core current asset. Now, core current asset was, remember in the question, it was given as 25% of assets. Total asset is nothing but current asset. Okay, current asset was 2,31,250. Of that, we'll have to take 25%. Okay, so it will look something like this: 75% of current asset 2,31,250 minus 25% of 2,231,250 is 57,830. We will subtract that, multiply it by 75%. Whatever answer you get from that, we'll have to minus the current liability. So it comes to 1,30,780 minus 37,500. So our final value will be rupees 92,578. Okay, so that is the three maximum permissible bank limit. Okay, according to the method of Tandon committee. The first method, second method, and third method. With this, the entire sum based on working capital financing comes to an end. We started off with the working notes, then we used that entire statement to get the working capital, and from that we were able to get the maximum permissible bank finance according to the Tandon committee. Okay, this is like a full-fledged sum that has been completed. Okay, so I hope everyone have understood the topic based on how to solve sum based on working capital financing under the subject strategic financial management. With that, we will be ending this video here. Thank you.